Singapore's founding father, Lee Kuan Yew, once quipped, "When two elephants fight, it is the grass that gets trampled and suffered." In this scenario, the elephants are the United States and China. Many countries in the global south, including Malaysia, are keen to avoid being caught in the middle of any future conflicts between these giants. Malaysia, a small but significant player in Southeast Asia, is determined to stay neutral and not take sides in the ongoing US-China tensions. Prime Minister Datuk Seri Anwar Ibrahim has been clear that Malaysia will not engage in any Cold War mentality and is committed to being fiercely neutral.
Now, but we are an independent nation. We are fiercely independent. We do not want to be dictated by any force. So whilst we remain to be an important friend to the United States or Europe and here in Australia, they should not preclude us from being friendly to one of our important neighbors, precisely China. Well, that was the context. And if they have problems with China, they should not impose it upon us. We do not have a problem with China. So that's why I refer to the issue of Chinophobia in the West.
This stance is a smart move for Malaysia. By staying neutral, the country has been able to boost its trade and attract foreign direct investments. Malaysia really doesn't have much of a choice but to maintain good relationships with both the US and China. After all, the US is the largest source of foreign direct investment in Malaysia, while China is its top trading partner. In 2022, the US was the top dog in Malaysia's foreign direct investments, bringing in about 37.8 billion ringgit. The top three sources for FDI were Singapore at 22.4%, Hong Kong at 12.2%, and the US at 10.5%. But if you look at the big picture, the US is still Malaysia's biggest FDI contributor overall. China, on the other hand, has been Malaysia's largest trading partner for 14 years straight. In 2022, China accounted for 17.1% of Malaysia's total trade, which grew by 15.6% to 487.13 billion ringgit compared to 2021. China was also Malaysia's largest import source, making up 21.3% of total imports and growing by 20.7% to 276.5 billion ringgit. The main imports included electronics, machinery, and chemicals. Given these stats, it's clear why Malaysia needs to maintain good relationships with both China and the US. Plus, Malaysia is a key player in the global semiconductor industry, holding 7% of the market and contributing to 23% of US semiconductor trade in 2022. With around 50 years of experience in the back end of semiconductor manufacturing, like assembly, testing, and packaging, Malaysia is planning to step up its game in areas like integrated circuit design and wafer fabrication. This has made Malaysia a hotspot for semiconductor factories, especially as US-China tensions rise. In December 2021, American chip giant Intel announced a more than $7 billion investment to build a chip packaging and testing factory in Malaysia, with production set to start in 2024. Intel's first overseas facility was an assembly site in Penang, launched in 1972 with a $1.6 million investment. Over the years, Intel has added a full test facility and a development and design center in Malaysia. Besides Intel, NVIDIA also plans to invest in Malaysia. Malaysian giant YTL is partnering with NVIDIA, the leading graphics processing unit design company, to build Malaysia's first artificial intelligence cloud data center. This new center in Johor will house one of the world's fastest supercomputers, powered by NVIDIA's latest Blackwell GPUs. The YTL NVIDIA partnership involves a significant investment of RM20 billion in Malaysia. NVIDIA's CEO, Jensen Huang, said they are working with YTL AI Cloud to bring a top-tier computing platform to Southeast Asia, driving scientific research, innovation, and economic growth in the region. Microsoft is also making big moves in Malaysia. After a visit from Microsoft CEO Satya Nadella to the Malaysian Prime Minister in Putrajaya, Microsoft pledged to invest 10.5 billion ringgit to build Malaysia's AI infrastructure, marking its largest investment in the country so far. This investment surpasses what Microsoft is spending in neighboring Indonesia and will help upskill 200,000 Malaysians by establishing an AI Center of Excellence. Recently, Google announced a $2 billion investment to establish its first data center and cloud region in Malaysia. This investment isn't just about building infrastructure, it aims to open up new opportunities for businesses, educators, and all Malaysians. Google stated that the data center would support services like Google Search and Google Maps and help deliver the transformative power of AI to users across the country. Malaysian Prime Minister Anwar Ibrahim said the investment would add $3.2 billion to the economy and create 26,500 jobs by 2030. Not only that, other major players from the United States like Texas Instruments, Applied Materials, Lam Research, Micron, and Hewlett-Packard have also committed substantial investments in Malaysia, amounting to billions of ringgits. They are primarily focused on expanding or setting up operations in the chip industry. This trend isn't limited to just US companies. Big names from other countries, such as Infineon and Bosch from Germany, AT&S from Austria, Ericsson from Sweden, and Simtech from South Korea, are also eager to invest in Malaysia. In addition to these Western investments, Malaysia's Prime Minister Anwar Ibrahim has strengthened ties with China. He visited China twice last year and announced that he had secured 19 memoranda of understanding from Chinese entities, reflecting an investment commitment of 170 billion ringgit or $38.5 billion. These MOUs cover various sectors, including infrastructure, renewable energy, telecommunications, and tourism. This represents the largest single investment commitment between Malaysia and China to date. China has been Malaysia's largest trading partner since 2009. In 2022, trade between Malaysia and China made up about 17.1% of Malaysia's total global trade, worth 2.8 trillion ringgit. The total trade between the two countries in 2022 was 487.13 billion ringgit, a 15.6% increase compared to the previous year. As manufacturers in the US and China face constraints, those in Malaysia are seizing the opportunity to upscale their operations and expand their global market presence, especially in the semiconductor industry. While Washington and Beijing continue their rivalry, Malaysia is stepping up as a global manufacturing hub, particularly in the semiconductor sector. The country's well-established electronics ecosystem, coupled with the government's proactive efforts to attract more investors, strengthens its position. The US-China trade war has caused global market turbulence, but Malaysia seems to have emerged as an unexpected winner. If Malaysia's strategic initiatives and operational flexibility keep drawing multinational companies, the country might secure a promising future in the global semiconductor industry. Do you agree that Malaysia has become the surprise winner amid the US-China tensions? Share your thoughts and leave your comments below. If you enjoyed this video, hit the like button to show your support. Don't forget to subscribe to our channel to keep receiving interesting videos like this one.